everybody, I'm Cantonese Cat. Everybody, Cantonese Cat here. A lot of people saying rate cuts is going to be bearish. A lot of people saying rate cuts is going to be bullish. There are a lot of different narratives out there, so it's really hard to try and distinguish which narrative is going to be correct. I don't generally try to go by narratives. I try to go by something that may be a little bit more objective, something that I can tell on the charts a little bit more. The way I see it is I am getting more and more heavily invested into fintechs. I have a few stocks that I own Shopify, I own Affirm, I own Robinhood, I own SoFi, I'm still adding to SoFi, and also own PayPal, and I am trying to start a new position into PayPal. Why is it that I'm into all of these stocks? Well, I mean, let's look at a macro view here. Again, a lot of people think that rate cuts going to be bearish. I would argue that one thing is that rate cuts has already been happening. The Fed doesn't really do anything because if you look at the yields themselves in 2-year and 10-year, it peaked around like 5.3 and right now it's already gone down all the way down like to 3.6, right? It peaked around 5% for the 10-year and is already down to like 3.4%. So the rate cut has already happened in the market. You already have increase in liquidity in the market as a result, because you just look at the money supply, you can see that it's just been steadily going up. Quantitative tightening, as we had in 2022, is over. There is not really a thing anymore, right? If you're also looking at the mortgage rates, and this really is telling you like the 30-year mortgage rate, you can already see that it's already plummeting from like 7.8%, currently down to 6.2%. So the market is already doing easing. The market is already having increase in liquidity kind of splooshing around the system. And the one core backbone of what the American economy, in terms of the amount of liquidity that's being splashed around, would be look at IWM. IWM is the small cap index of Russell 2000, and if IWM does well, that usually means that you have a little bit more of a risk on sentiment going on. Just looking at this objectively, and again, the reason why I don't like to go by narratives, because narratives can change, narratives can be used to manipulate certain things, narratives can be used as a hindsight to justify certain things, right? Instead of looking at narratives, why don't we look at price action? Why don't we look at what the whales are actually doing? Why don't we look and see whether or not are the whales buying, are the whales selling, and what have they been doing, what they're thinking moving forward, right? When you have somebody like Stanley Druckenmiller talking about they're having calls on IWM, that should get your attention. These are really seasoned investors and traders. They know exactly what they're talking about, right? And if you just look at the IWM chart here, this is a monthly chart, really from 2022 all the way to 2023. They've been accumulating. This is a very classic accumulation pattern over here. It's been forming a big giant cup, and right now we're trying to break above the cup and not able to do that quite just yet. But you can't just have like a 2-year accumulation period over here without them wanting to shoot the price up a lot higher, right? So if that is the American backbone in terms of what the small businesses are doing, and if the US dollar continues to be on a downtrend, this really looks a little bit like a dead Cantonese bounce to it, doesn't it? It is currently at some level of support. For example, it is at the Ichimoku support over here, but the cloud is thin. I think the US dollar is a potential for it to bounce up a little bit, but I think ultimately the US dollar is probably end up going to plummet, right? You have oil that's currently not doing very well. Oil really has been on a downtrend and is finding some support at the bottom of the monthly Ichimoku cloud, but overall it does look a little bit like a dead Cantonese bounce kind of thing. Most likely it's probably going to get up going lower, maybe going back down to backtest the bottom of the cloud over here, but it does seem like to be a little bit of a trend change. This whole thing just looked very, very exhausted. Commodities also look exhausted, although it did have a perfect bounce here on the monthly cloud. It does look a little bit like a dead Cantonese bounce. I think that commodities probably end up entering the cloud just because of how exhausted this uptrend has been looking. So if you're talking about inflation is probably done, you're talking about the small caps are probably going to do very well. If you're talking about all of these, yields are going to go down, which basically means increasing liquidity in the system, and also just looking at liquidity itself, there's an indicator that you can actually look at. If I can actually pull up the indicator, man, internet's certainly not doing very well. There's an indicator that is called the M2 Global Money Supply, and that has really been going up. It is this M2 Global Liquidity Index here that I'm talking about, and you can see that currently it's just kind of shot way up, right? You really have broken above this horizontal resistance trend line over here in terms of global liquidity. And this is calculated by US, Japan, China, Europe, and Great Britain. And this all 5 combined together, you just had a breakout. And also IWM looks like it's about to have its breakout. Maybe it might take another few months or so, but so far it's looking pretty decent, right? So all these things are basically pointing towards an increase in liquidity, quantitative easing is coming back. Where is the money probably going to end up going to? Well, the money's probably going to end up going to more speculative stocks, probably end up going to crypto as well. And you can also see that even for crypto, if you look at, there's a chart called Others chart. The Others chart is really a chart to show you the cryptocurrency market cap excluding the top 10 coins, right? So you're excluding like Bitcoin, Ethereum, some of the stable coins, and so you're excluding some of the top dogs like Solana, right? And if you just look at the 20-month moving average, it's been finding perfect support, right? And if you're also looking at like any potential trend line support, it's been really just backtesting this, trend line is holding perfectly fine, right? All of this downtrend over here is happening on declining volume. So even altcoins are looking really, really, really good. I cannot really be that bearish on the overall market. Now, because of that, my thesis is that if altcoins does well, if IWM and Russell 2000 does well, if there's going to be more risk on sentiment, Robinhood is already telling you that there's already been a risk on sentiment really over the last year. Look at how nicely it broke out from this big giant rounded bottom accumulation zone. Big giant engulfing candle engulfing the past 4 months over here, and it's just been going up, like nonstop since then, right? What am I seeing on Robinhood? Well, I ended up buying Robinhood around like $12, and that's my cost average right now. I have not been adding to it, but I'm very happy about it. It's basically following up a rising 20-month moving average. It's basically falling on the Ichimoku. It had a bullish cross back in February 2024. Right now, Tenkan and Kishin is separating. You did back test both Tenkan and Kishin back in August with that big giant, carry trade scare, and it's bouncing off of it perfectly, right? So naturally, the next place I think is going to be going up. And I initially was a little bit concerned because of some bearish diversions that I was kind of seeing here on the RSI on the weekly. I've seen price kind of go up a little bit, exhaustive move over here with a little bit of a bearish divergence. That's why it's already been worked out with the yen carry trade, and I think price is ready to go up a lot higher. Even on the monthly, the RSI is not anywhere near being overextended at all. Right now, it's just kind of hanging around like the 50s, right? So there's a lot more room for Robinhood to go up. Am I adding to it? No. Am I happy with my position? Yes, because I did most of my work down here. And that's kind of where I'm seeing this. If I didn't have a position in Robinhood, would I have considered starting a position in Robinhood? The answer is yes, right? Because it does look very nice. It's just, above the cloud, reclaiming the Tenkan and Kijin on the weekly here. If you look at the Gann chart that I've drawn, you can also see that again, I've basically drawn this based on not the weekly, but basically based on the monthly. And if I do this, let me see here. Probably need to readjust it here a little bit. Yeah, so I did this actually based on the 2-week chart here. I'm going to make it 180. I'm going to make the factor here instead of 2.06, I'm going to make it 2. And you can see right now Robinhood, interestingly, is trying to get above the arc resistance over here. Right now, over the last few months, been rejected on the 45-degree angle, came back down, back tested the arc, back tested the horizontal level pass, and right now it's trying to challenge the arc up here. Now, it's able to close about the arc. If it's able to close about this arc over here, then I really do think the next price will end up grabbing into is maybe towards the confluence of this angle as well as the horizontal zone over here around like 33.5. And if you also look at the Fibonacci level, I'm going to turn off the volume here. If we look at the Fibonacci level here, from the previous all-time high to the lows with a magnet, you can see that it has really just been gotten rejected off the 0.5 Fibonacci level on the log scale, and it would be good to challenge the 0.5 around $24 and see whether or not we move on to the next target, which is going to be anywhere around like $32 to $34 up here at the confluence level, right? So that's why I'm seeing Robinhood. I'm very bullish on Robinhood still. I like this stock. Another stock that I've been very, very bullish on for a very long time is Affirm. And Affirm, I kind of look at this a little bit differently. During the entire downtrend over here, it was on really pathetic volume, absolutely pathetic volume, right? Because it was on such pathetic volume, just kind of going down like this, the further it goes down, I think the better opportunity it was going to be. And whenever it get really close down to like the 0.382, I was like, man, this is a great opportunity. It ended up went down underneath it a little bit to really freak people out. Maybe even backtest the volume shelf support over here, right? Found perfect backtest here. And now it had a big bounce, right? If you just look at the monthly chart, this monthly candle in August have engulfed like 6 candles previously. I can no longer be bearish on this chart. I was never really that bearish to begin with, because mostly it's just been forming a higher high and trying to find a higher low. And it found the bounce off of the 0.382, got above the 0.5 like butter. And right now the next resistance is going to be at the 0.618, which is going to be a little bit of a stronger resistance. And above that, I think it's going to hit $90. I really think that Affirm is going to hit $90 in 2025. I'm that crazy, right? Looking at the other technicals, like 20-month looks great, bounce off the 20-month moving average there. It's not way outside the upper Bollinger Band here at all. It's not overextended by any means. On the Ichimoku, it's reclaiming the Tenkan and Kijun here on the monthly. This stock is looking great overall. I'm not really picking up any like concern for any major bearish divergences or anything. So if you look at like, let's do a quick GAN, right? I'm gonna do a little bit of turn off the volume here. I'm gonna do a quick GAN chart by just clicking GAN square here, using a magnet to the bottom of the price, kind of go up, and I'm gonna do this in maybe in a little bit of a shorter period here. Instead of 45, I'm gonna do 90. And then instead of the factor 2, I would usually just start the factor of 1. If you start the factor of 1, you can see that it really has just been bouncing from one level up to another. And right now we're a little bit of an angle, resistance, but I think the next natural level is going to be around like the 53, 55 zone, which is confluent with my Fibonacci level, right? The next area is going to be the arc up here around 90, or even like the top of the horizontal line over here around 90. If you change that factor to 2, you can see a little bit of a different picture. It got rejected here on the bottom of this arc. Came back down, back tested the arc down below, pushed back above, tested the angle. Now it's ready to go up higher. Where is it going to go? Maybe around 55, right? What's the next level? Maybe this arc over here around the 80s and 90s, right? Even 100. I really do see maybe around 2025 it's possible to hit this area here, if not 2026. I'm that crazy, right? But that's Affirm. I have a position in Affirm. I have a position in Shopify as well. Shopify is also one of those stocks that are looking pretty decent from the technical standpoint. It did have a little bit of a scare back in August, but overall in September right now it's looking great. The 20-month moving average bounced off of it almost perfectly, right? If you look at the monthly Ichimoku, you got bouncing back above the Tenkan and Kijun. Right now it looks like it wants to challenge the Ichimoku cloud up above. Cloud's a little bit thick. You might have a little bit of a hard time trying to get in. You got rejected close to it last time, and price just kind of did nothing for like more than half a year. So we'll see what happens as it hits the cloud. But I think Shopify is going to go up back to maybe like the low 80s zone, hit the cloud, and then see what happens. Overall, it's a very nice trend. If you just look at the GAN here, I drew a GAN here based on the past history. Like there's a lot of history for this. So it did like 180.5. You can see that it's just been respecting this angle very, very nicely. It finally broke above the arc over here, and right now it's trying to challenge the horizontal zone up here around like $45, and that's exactly what it's doing. So because it got over the arc, because it got over the angle here, I think it's probably going to break above the horizontal zone over here. And if it's able to break through the monthly Ichimoku cloud, then you're talking about hitting some of the targets up here, maybe around like 200 to 250, 170, somewhere here, depending where it hits the arc. And then 250 is going to be like the natural, or 260 is going to be like the natural next level is going to go. It might take about 3 to 5 years to get there, but I think it will get there. That's Shopify. If you look at PayPal, this is a position that I have just started without looking at the GAN. If just looking at some of the traditional stuff that I generally look at, looking at the 20-month moving average, reclaimed it as support from resistance, right? That's always a bullish indication. If you're looking at the Ichimoku on the monthly, you can see it's a little bit range bound between the Tenkan and Kijun, but it did end up reclaiming the Tenkan as pretty convincing as support now, right? It's no longer resistance like it was over here, now it's support. Now it just has to challenge the tank and the kitchen up above. So that's why I think that this is a good accumulation zone. I think it's probably going to end up getting stuck between like the mid 60s to the mid and high 70s. Probably going to end up getting stuck here for the remainder of 2024. And then once it breaks out, you're really talking about maybe over the next couple of years, triple digits, 120s, somewhere up here. 130s even, somewhere up here, right? Maybe back test on the zone up here. I think 120 is certainly entirely a reasonable possibility here. So that's kind of where I'm seeing PayPal. I'm just starting in a small position. I'm probably going to keep adding to that. If you also just looking at, because PayPal has a long history, I can do like a monthly GAN here, and I do 180 and 2, and you can see how it just kind of bounced from one GAN level to another, and it basically just broke through 2 arcs, and then it's able to finally found support over here on this arc, as well as at the horizontal zone over here, bounce from that. Right now you're getting above the arc, above the angle. Looks like it probably wants to challenge the arc up here at some point, and the next gravitating levels for the GAN is going to be maybe around like 140 or so. But I do think most likely it's going to end up over the next couple of years, maybe a few years, maybe up here in the 110s, maybe up here in the 120s. We'll see. That's kind of where I'm seeing PayPal. I think that over the years, this is going to be a pretty decent buy. Based on valuation play. I don't think it's going to like moonshot and make a V-shaped recovery by any means, but I think that it's a pretty decent buy. I think it's going to end up outperforming the S&P 500 moving forward. So that's why I'm in it. SoFi, I have a position in SoFi. For SoFi, there really hasn't been that much price history. So the bottom is really over here around December 2022. So I did again based on a weekly chart. I did like 180 and 0.1. Are the numbers that I put in. It basically is broken off finally of this this diagonal bear market trend line. Is broken off of that. It's pretty convincingly about that right now. It's also pretty convincingly above the arc over here, which we have been getting rejected here, and we're able to finally break above the arc, right? Where are we at right now? We're at the horizontal level over here around 8.2, and we're so far getting rejected. On the Ichimoku, we can also see that this is also confluent with being at the top of the Ichimoku cloud. So it's going to be not that easy to break above the zone, but if it does break above that zone, you're really talking about $11 in a hurry. Like I think it can hit $11 in a hurry. This is SoFi. SoFi does this thing where bears basically take the stairs down and then bulls take the elevator side. I would not be surprised if it hits like 11. Bears take the stairs down, bulls takes the elevator. So I'm not surprised at all. Sorry about that. I end up being cold. But anyway, I think SoFi is one of those that is currently still at resistance. It hasn't really broken above the key resistance yet at the weekly Ichimoku cloud, as well as confluent with the GAN horizontal zone over here. So we'll see what happens. I am still very bullish on SoFi in the long term. I think whenever it breaks above, it's probably going to go to like above 10 to like $11 in a hurry. I still think that the ultimate target would be like 14. I might end up taking some profit from SoFi at like $14, but I'm not sure yet. Whether or not to add at the zone, I probably add a little bit. I probably won't be as aggressive as I was before. Now the price is a little bit over $8, but I still like the stock. So the next one I would like to talk about, I do not have a position in this one, is Square. Now, when it comes to Square, it also is a little bit underperforming. It's got a little bit of the same look as SoFi. It's just been going sideways, do absolutely nothing for like 2 years and 2.5 years. And right now it's trying to break above a green Ichimoku cloud here on the weekly, and I think it will break above. Probably get to the 70s, probably back test before going up higher. I do think that this time would probably be it, just because of the macroeconomics, just because of all the things I was showing you earlier. So Square may not be a bad play. Now, is it going to be as good a play as the other plays I was showing you? I don't know. Like it's really tough for me to kind of decide on that. But I think that Square is a pretty decent play. Why would I have any like reservation on that? Well, I don't really have reservation per se, but the 20-month is still flat. We're just now starting to try and get over the 20-month, and who knows, maybe it turned out to be a wick again, right? I don't think so. I think this is probably going to be the time to kind of get above of it, but 20-month is kind of flat to a little bit negative sloping. So it's kind of what, your feel in terms of what the stock is doing anyway. It's like a little bit like, meh, it doesn't really want to tick off yet. It's trying to reclaim the Kijun on the monthly. It hasn't really reclaimed the Tenkan up above quite just yet. It would be a lot more bullish if they were to get above both of these, right? And then the other thing too is if you do again, And because we have a lot of price history, so I'm able to do a monthly GAN 180 and 5. It did, kind of show a lot of market symmetry here. We got rejected this arc and just gravitated down to the arc underneath. And right now it's gotten back over the arc, and right now it's just kind of suspended in space. Where is it going to go? Is it going to go down here to horizontal again, or is it going to go up to like maybe triple digits? I think it's probably going to go up to the triple digits, maybe by in 4 to 6 months is possible, if we end up having a very, very bullish sentiment. And a lot of people kind of forget how fast this stock can move when it decides to move, right? When it moved from $40 all the way to like $80 within just a period of like 4 or 5 months. It can do that again. But I think that this arc over here is going to be resistance because it was resistance over here. So we'll see where it hits the arc. If it hits the arc later on, it might be a little bit lower. If it hits the arc early on, it might end up being a little bit higher. You'll probably get rejected at arc though. It might actually go down an arc here a little bit before going up higher to consolidate a little bit more. But I don't have a position in SQ. Would I get into a position in SQ? I could, but I already have like Robinhood, Affirm, Shopify, PayPal, and SoFi. So I'm probably going to pass on SQ at this point. It's not because I'm bearish on it. It's just that I'm a little bit too over-concentrated into the whole sector. So a couple other stocks I like. I like ANU. When I was looking at ANU around like $8, I really think that it was going to break back above and go up to, to protest its previous all-time high. It's done that. It looks like it's a bullish chart. There's nothing for me to say bad about ANU. If you ask me about like the potential target for ANU, I can just draw like a quick, Fibonacci. I really think that over the next, couple of years or so, it could hit like 27, 28. I really do think that that's the case. And it's as crazy as it sounds. Even if I don't do like a log fit level, I can see it hitting like a 2.618. Maybe over the next 3 years or so, I can see ANU doing that. And that would not be a bad thing. Finally, talk about Upstart. Upstart is a pretty controversial stock in terms of what everybody's thinking, whether or not you're bearish, whether or not you're bullish. I gotta say, I was more bullish on Upstart, and I think that yesterday's scare is already getting retraced. I'm not really seeing anything bad here. Reclaiming the 20-month moving average. It's also reclaiming the Tenkan here. It got stuck at the kitchen, right, above. So it's got a little bit of like a PayPal-ish kind of feel to it, but this stock moves a lot faster. If I just do a quick GAN, there's really not a whole lot of history, so I'm going to go through the weekly here. And the GAN, I'm going to have to use the bottom part over here to draw. So just real quickly, GAN square from the bottom here with a magnet going up here. I'm going to make the period maybe 180. And I'm going to make the factor 1 first to see what we're seeing here at 1. And at 1, you get a pretty clear picture in terms of what it's doing. It basically just got back above the arc, back tested the horizontal up here, went straight to the horizontal up above, got above the horizontal, right now getting rejected at arc, trying to find support here at the angle. That's exactly what it's doing. So it's still underneath a little bit of resistance. I think like the mid 40s or low 40s is going to be resistance maybe over the next few weeks, but hopefully it rises the angle up. And when it breaks the angle, it's probably going to hit back over here to the previous all-time high around not previous all-time high. Back here to this higher back in July around 60s. I can see that happening. The previous all-time high is still ways far away. It could take years and years and years for Upstart to hit 400 again. And it can even take years and years and years for it to even get back to maybe even this level here around the 150s. So I'm not sure about 400 anytime soon. But it looks like it's really looking like it wants to go and challenge this arc here, which we got rejected over here. But you're able to break about this arc, the next arc is up, right? If you're able to break back about this arc, then you're talking about maybe challenging this arc up here or the previous high over here around the 150s. But it can take a couple years for it to do that. That is my thoughts on all of these fintech stocks. And that is what I'm doing with these information. Thank you for listening. Have a good one. Bye.